Hey, I'm Ben from Modern Graham, and today we are going to talk about KB Home and do a Modern Graham valuation. So be sure to stick around and find out what I think of this company. So, of course, we've got KB Home. Ticker is KBH. Current price is about $31.45. It is in the sector of consumer cyclical and the industry of home building and construction. And the balance sheet, these are the items that are most important for my valuation metrics, and they will all come into play in this valuation. So we've got total current assets, total current liabilities, long-term debt, total assets, intangible assets, total liabilities, and outstanding shares. Now over here you can see the growth in earnings per share. It was very strong in the housing boom and then took a hit when housing prices fell and construction really slowed down, but then it has continued to rise back up, and it is near the levels where it was at previously. And you can see that over here in the details. You can see that it rose up, it took a huge dip, and it has now resumed to get back to about where it was before. EPS MG is a weighted average of the earnings per share, taking a look at the last 5 years of data. So with the most weight going on the current years. So that smooths out the business cycle and allows you to have a better handle on some of the longer term trends in the company's earnings. And you can see that has been growing as well. Over here you have dividends, and we have seen steady dividends even in the years where the company did not have a positive earnings per share, and that is very good. Now, that said, they did cut the dividend, which you never like to see when you are a long-term investor. So that is a bit concerning, but right now the dividend is back above where it needed to be. Now, what's interesting about this is that the dividend payout ratio has remained pretty low. So they are really focusing on reinvesting those earnings heavily and hoping to grow further. So now, stage one. Is this company suitable for the defensive or the enterprising investor? Keep in mind, the defensive investor is one who is willing to do, or who is not willing to do extensive research. They want to have a stringent set of requirements, and if the company passes those, then they feel much more comfortable moving forward. So we've got the market cap over $2 billion. We pass on that regard. Current ratio over 2. This company has a current ratio of 4.89, so we pass there. Positive earnings per share for 10 straight years. It does not quite pass that. It had one negative year in there, so we fail. Dividend payments for 10 straight years. Passes that. Increase of earning of 1/3 in earnings per share in the last 10 years. It just barely passes that too. PEMG, less than 20. That is the price over that weighted average earnings per share. That comes to 5.32, so it passes that. And moderate price to assets, the price to book ratio is below the threshold of 2.5. And if you've been keeping count, we are up to 6 points for the defensive investor test, and it is therefore suitable for defensive investors. And of course, the enterprising investor is willing to do more research, but also willing to invest in any company that is suitable for the defensive investor. So here you can see it passes all 5 tests for the enterprising investor, but it automatically qualified anyway. So moving on, be sure to take a moment to like the video if you're enjoying this and subscribe to the channel. And after the video, click down in the description below or the comment. There is a link to a free valuation calculator, which if you are enjoying my valuations, you can do some on your own there too. Stage 2 is a determination of intrinsic value. So we take the Modern Graham value formula, which is derived from Benjamin Graham's book, The Intelligent Investor. And that formula is value equals earnings per share times 8.5 plus 2 times the growth rate. I've updated that to use my weighted average earnings per share. And so we get EPS MG in there. So we've got 2 variables to calculate: earnings per share Modern Graham, which again is a weighted average of the 5 years of earnings. We get 5.92. Then we use that and the earnings per share from 5 years ago of 2.02 to determine the total growth that we've had during those 5 years of 193%. Then we divide that by 5. We get an average growth of 38% per year. And we put in a safety margin at that point. But what's more important with this company is my ceiling on the growth estimate of 15%. The growth estimate is a key variable in this formula, and if you overestimate growth, it is very easy to overestimate your value, and so I put a cap on that at 15%. Now, if we plug those two variables in to the formula, we get a value of 227.77, which, as you can see by this very handy chart over here, that the value is much more than the price, and it is undervalued by this method. Then a couple of other things. One, we have the net current asset value, which is $34.41, and the current price is only $31.45. So we'll talk about that in a moment. That is going to be a very important thing to talk about today. But then the modern gram value based on 3% growth is 85, and 0% growth is 50. So if you assume that the company will not grow any further, but it will maintain the current earnings in perpetuity, then it would be worth $50. And the market is implying a growth rate of negative 1.59%. So the market thinks that KB Homes is going to shrink in perpetuity. And if you disagree with that, then that could be an indicator of value as well. The score that we get, and this is not quite calculating properly, but we will walk through each thing individually and calculate the score manually. So investor suitability, we get 2 points because it is suitable for defensive investors. We get 1 point because it is undervalued. It gets 1 point for trading below its gram number. It does not get a point for being long-term dividend growth. It does not get a point for trading or for having a high dividend yield. It gets half a point for trading below its industry average, and it gets 3 points for trading below its net current asset value. So we are at 3.5, 4.5, 5.5, 7.5 points. This is an A+ grade. We are looking at a very solid company under the modern gram methods. Stage 3 is further research. So at this point, if you've determined that it is suitable for your individual investor type, defensive or enterprising, or maybe you like to speculate, but anyway, if you've determined that it's suitable for you and that it is a good value, which as we've been talking about, it would seem to be, then now it's time for you to do further research to determine if it is suitable for your portfolio. Only you can make that determination. I can't make a recommendation, but you can look at your own goals and your investing strategies and decide if you want to pursue this company. Now, net current asset value formula. This is very interesting here because this is a liquidation value. If you take the current assets, the cash and the things that the company can get right now, and you use that to pay off every single liability that the company has, all of its debt and anything that it owes, you still get enough when you divide by the outstanding shares. They could pay off all their debt with their cash and have $34.41 to pay out to each and every shareholder. That is more than the price to buy the company, which means that if shareholders were to buy this company at the current price and force the liquidation, they would make about a 10% profit. That is very interesting. And traditionally, companies that are trading below their net current asset value have done well. Now, that does mean, typically when they get to that point, they do have a level of risk, but this is very, very intriguing right here. Gram number formula, that is derived from the defensive investor requirements. A lot of people like to use this as another metric to determine value. And for this company, we get a gram number of 93.77. Again, the price to earnings ratio for this one is 5.32. Current ratio is 4.89. Price to book is 0.77, and the dividend yield is 1.9%. Moving on to stage 4. So the last stage in this is to determine if it is a good buying opportunity or a time to buy. Because once you've decided that you want to buy, you want to make sure that you're maximizing your profit. And that means taking a look at what the market is doing. And in KB Home, you can see it was on a very long-term downward trend dating back to December of 21. But that seemed to reverse in September, and now it is on the climb again. You can see it hit this very, very old support level from 2020. I guess not very, very old, but it hit that. It bounced back up at that point, and it came back down and hit that again. And now it is going back up, and I have this newer trend line. This is a shorter term trend line, but you can see that it has kind of bounced around that, and it's following that upwards. And it hit this point, and it broke through that. I'd be very interested to see what happens there, but this one is at a good spot, and I might be taking a look closer at this myself as well. But anyway, I hope you found this useful. If you did, be sure to like it and click on the video on the screen now to see another video that I think you will like. There we go. Thanks for watching, and I will catch you next time. Take care.